Okay, Jens, on gold, is it correlated with what? Tell us about gold. Is the back broken on this great gold bull market?
Well, so we've had a situation here where a lot of sort of dollar-linked assets, including anti-dollars, such as gold, had a really remarkable run. And then we've seen essentially gold assume a life of its own over the last couple of weeks. You can argue perhaps there was a catalyst from what you were describing in the intro, that U.S. real yields started to retrace a little bit, move slightly higher. But gold's really had a life of its own. So I think it's very much a situation where positioning starts to play a crucial role. If we look at supply and demand in the gold market, it's very, very kind of one-sided what's going on. It's been the speculative ETF demand that has really been driving gold, whereas fundamental demand from jewelry, central banks has not really been that strong. So it's resting on very much the speculative demand, and that is a situation where you're going to have volatility, as we've seen. And I think that's going to be the outlook. It's going to be a very volatile asset from here because it's very much driven by the speculative piece.
Jens, good morning from London. So are you saying that gold will basically need more bad news to prosper from here?
Well, it certainly helps gold if interest rates are heading towards zero everywhere. And obviously, we had negative real yields very much being priced in the U.S., partly as a function of an anticipation that the Fed is going to move into maybe a yield curve control environment. So that's sort of the domain. I think looking ahead, one of the things we have to look at is the dollar trend really going to continue, right? So that is crucial always to the gold direction as well.